If you are looking for a video on how to simply trade cryptocurrency futures on BingX, well, you are in the right place. In this detailed, comprehensive, step-by-step beginner's guide, I'm going to uncover everything there is to know about how to become a proficient crypto trader on BingX. Please feel free to skip ahead, navigate, rewatch with the chapters down below in the video timeline. Please, of course, do smash the like button because that helps immensely in educating more people in the cryptocurrency space. And of course, subscribe, turn the bell on, join the family. And without any further delay, let's get straight into the content. So why should you use BingX? Well, I've been using them for about 6 months now. And as someone that's been trading for the best part of 6 years, I have to say they're definitely within the top 3 trading platforms that I use, and it's the reason why I'm making this video about them. In terms of liquidity, the amount of different cryptocurrencies you can buy and sell, in terms of their API, in terms of the customer service, security, safety, ease of use, their UI, everything. They're a really, really good crypto trading platform, and it's one of the reasons I wanted to make this video. The other great thing about BingX is no KYC, no verification. So you can deposit crypto and trade really quickly, really easily, no matter where you are in the world. The other thing about BingX is not only can you trade cryptocurrency futures, you can also trade stocks, the biggest names like Google, Apple, Microsoft, etc. You can also trade commodities like gold, oil, corn, sugar, whatever you want. And you can trade indices and FX as well, so foreign exchange. So all round, really good, easy to use crypto trading platform. Sign up is super simple. I am an affiliated partner of BingX, not being paid to make this video, but if you do use the link in the video description down below, not only will you be able to get up to $5,000 bonus when you sign up and deposit at least $100, make your first trade, you'll actually be able to get up to 50% off your trading fees as well using that link down below, or feel free to scan the QR code on screen. Anyway, that's my brief introduction. Let's move on to the next chapter down below. So buying crypto, depositing crypto to your new BingX exchange account, it's really easy. I'm going to demonstrate how to do that. A quick note, however, if you maybe already had a BingX account, I do suggest to create a new one using a new email address with the link down below, because that way you will benefit from 50% off all your trading fees, and of course up to $5,000 bonus when you deposit at least $100. Now, buying cryptocurrency, what I would say is it's very easy to buy crypto with fiat, with dollars, euros, pounds. But in order to buy crypto on BingX or any cryptocurrency exchange, you do need to be KYC registered, i.e. verified. It's your prerogative on BingX whether you verify or not. And of course, in some jurisdictions, you cannot pass KYC. So if you do want to send cryptocurrency to BingX without being verified, you can do so from another exchange. Let's say you had a Binance or CoinBase account or Kraken account or any other crypto exchange account where you may be verified. You can easily send your crypto to the BingX platform. I'm going to show you how to do that. Or of course, if you're happy to KYC and verify, which is recommended, you can easily buy with your debit or credit card or deposit from your bank account straight to the BingX platform. But let's say you wanted to deposit cryptocurrency. So you need to go to assets. You go to my assets and you simply go over to deposit. Now, depending on the cryptocurrency you already hold, you're going to need to select it from the drop down. For example, if you had USDT in another trading account or wallet, you would need to select the correct network, whether it's the Ethereum network, which is ERC20, and that will usually start or always starts with 0x, you select that one. If it's a Tron network, which is the best network in my opinion because the fees are very, very low and the transactions are very, very quick, you would select that network. So you simply need to get the correct currency, So whether it's Bitcoin, Ethereum, USDT, select the correct network, and then you can get the address. You can get it via your QR, or you can copy the address and put it in the wallet that you're sending from, so you can easily deposit cryptocurrency to your BingX account. But do be very careful that you are sending it to the correct wallet address, correct network, because it is the responsibility of you, the sender, to do so. BingX or any other crypto exchange will not be responsible if you unfortunately were to put in the wrong address or the wrong network. Cryptocurrency can of course be lost. So take this very, very carefully, this part of the video, but it's very easy to do if you just follow it carefully. If this is one of your first time sending cryptocurrency from one wallet to another, I always suggest to send a small amount, maybe $10, just to test that it goes through, and once it's gone through, you can send the remaining balance that you wanted to send. So let's talk about the different markets BingX offers traders. Now, let me be very clear and break down the differences here, because you have perpetual futures and standard futures. With their standard futures, you have USDT margin and coin margin. So I'm going to explain what that is first of all. With the standard futures, USDT margin basically means you're using USDT as the collateral. You're opening a trade with USDT, and your profit and loss will also be in USDT. With coin margin, which standard futures allows you to use, perpetual futures is only USDT, but with standard futures you can use coin margin as well. So you could use Bitcoin or Ethereum, for example, to collateralize that trade. And in simple terms, what that means is open a trade in Bitcoin, for example, or Ethereum, and you'll close it with Bitcoin or Ethereum. So the profit or loss will be coin margin. So the benefit of that is, say, for example, you are buying Bitcoin, the profit not only is the profit of the trade, but it's in Bitcoin terms, which of course has gone up because you've longed Bitcoin and you've bet on the price going up. Your profits will have been increased as well. So there is a benefit to using a coin margin in certain circumstances, particularly if you're going long and it's not a short-term trade. Anyway, I don't want to complicate things, but the main differentiating factors here are between the perpetual futures contracts and standard contracts. So let's look at the key differences here so we can understand. So the main difference between perpetual and standard futures is the margin. So perpetual futures currently supports the use of USDT as the margin only, while standard futures include, like I mentioned, USDT and coin margin contracts. So you have the choice of either. Now, the position as well differs. So for perpetual futures, multiple orders are combined into one position for easy management, while the standard futures, each order is managed independently, which is simpler and more intuitive for ordinary users. So in a nutshell so far, standard futures are easier to manage, easier to use, but perpetual futures offer a little bit more of a complexity and a little bit more functionality for the more experienced trader. In this video, and again, chapters beneath, we'll uncover everything you need to know about both so you can decide which is right for you. But going back to the key differences, trading fees, the current taker fee and perpetual fee for futures is 0.05 and the maker fee is 0.02. That's for perpetual futures. The trading fee rate for autonomous trading in standard futures, it's currently 0.05, and the trading fee rate for copy trading is so forth. The other thing I'll mention about perpetual futures is you do have a bit more control on the order types. For example, you'll be able to use a limit order, a conditional order, and a market order. If you're using standard futures, it's much more simplified for getting in and out of the market. But like I said, I'll compare the differences in more detail and give you a full guide on how to use both in the video. So let's talk about spot, buying off the spot. Essentially, your simplified form of just buying cryptocurrency or selling cryptocurrency. Not necessarily trading or using any leverage, just simplified good old-fashioned buying and selling. I'll just show you very quickly because this might be applicable. I've gone to my assets to show you I've now diversified my crypto a little bit into my fund account. You will need funds in your fund account in order to buy crypto off the spot. So I've put it into my fund account, and to show you a bit further, it's sitting as USDT. Now, of course, you will generally use USDT or USDC to buy crypto. However, you can actually use Bitcoin or Ethereum on spot as well to transfer into the other one. So if you had Bitcoin, you could buy Ethereum with that Bitcoin, or if you hold Ethereum, you could buy Bitcoin with that Ethereum. It's basically a conversion. But in 99% of cases, you're going to want USDT or USDC to buy on the spot. So I've got USDT in my funds account, so I can go to spot and I can use the drop down here to see all the different cryptocurrencies available, and there are loads of them. One of the reasons why I really enjoy using BingX, all the altcoins, all the meme coins, so many different ones to choose from. So say for example I wanted to buy Dogecoin, just for argument's sake. I click on Dogecoin, I've got my USDT balance there, and you're simply buying on the spot. There are two options: market, which is simply just buying and it will give you the best market price it can, or you can use a limit order. A limit order, you set the price that you're happy to pay, and you can see from the order book here the current last traded price. So for example, and I think I can just click it, for example I could click that one and it gives me a price of 0.6194. I could put the amount I want to buy in USDT, let's say $72 for example, and because my buy price 6194 is under the current traded price, because I'm using a limit order, it's going to go as an open order that's waiting to be filled. This will only be filled if and when the price goes to my order price, which is 6194. So if it goes to that price, it will get filled. I don't want it to be filled, so I'm going to cancel it. And if I want to buy it now, I can simply use market, select the amount I want, press buy Doge, and it's going to buy at the market price. So I'll show you a quick example. I'm going to buy on market, let's say just a small amount, $22 of Doge. I'm going to press buy, and the market order has filled. Now, if I go into my assets, I go to my assets here, I click on fund, you'll see that I'm now holding a small amount of Doge. Let's say I wanted to sell that. Well, I go back into spot. I'm going to go to Dogecoin here from where I initially bought. If I can't find it, I can simply press Dogecoin USDT. It's going to show the amount of Dogecoin that I currently hold. I'm going to press sell. It's going to show the amount of Doge I have here. I can sell the maximum, sell Doge at spot market, sell, and it's going to easily sell it back into USDT. And now you'll see that I hold no Doge, and I'm just holding USDT again. Simple as that. Fees are very, very low. Sometimes they don't even charge spot fees when they have promotional offers. And once again, by using the link in the video description down below, you will get up to $5,000 bonus plus 50% of all trading fees using that link. Let's move on to the next part of the video. So let's move on to one of the most important parts of the video: derivatives, futures trading. This is where the opportunities lay in crypto to make a lot of money, but disclaimer and risk warning, you can lose a lot of money as well. Trading futures, trading with leverage, it is for experienced traders. Please do watch this video carefully before you start trading futures. I'm going to explain to the best of my ability how you can manage risk, how to use futures trading, and all the different nuances involved in trading futures. So kicking things off with perpetual futures, like I explained in the earlier part of the video, you can see in the chapters down below. If you didn't watch that, there are differences, key differences between perpetual futures and standard futures. What I will say at this part of the video is perpetual futures are a bit more advanced. There is a few more different functionalities. Standard futures is a bit more simplified. So I'm going to explain both and you'll see in the chapters below, but we'll start with perpetual futures. So first thing to note for perpetual futures, there are different margin types you can use. There's isolated margin and cross margin. Unless you are a very experienced trader, I would recommend that you use isolated margin. The reason being it's much easier to manage the liquidation and the risk management of the trade. It basically isolates individual trades from others, and you're not using your whole portfolio to provide margin and capital for your trading. So yeah, suggest to use isolated unless you are a very experienced trader. You'll then, of course, have leverage, which you can decide and choose up to 150x leverage, which you will very rarely use or need. And I highly suggest you don't use high leverage, again, unless you're an experienced trader and know what you're doing. And the other thing with regards to perpetual futures is the different order types. You've got limit order, market order, and trigger order, which is also known as a conditional order. So I'm going to talk you through those different three order types. But first up, let me show you, at the moment it's saying available balance 0. You can click on this icon here, which is the transfer icon, and you can see although we do have crypto in our futures wallet, at the moment it's sitting in the standard futures wallet. So we're going to want to go standard futures and put it into our perpetual futures, and you can see the USDT available in standard futures is none because it's in Bitcoin. So we can do it from the fund account and we'll put it into the perpetual futures. So we'll just transfer, not all of it, let's just say $100 for now, and we'll put it into our perpetual futures account, and now we have this $100 balance. So first up, limit order. Okay, so a limit order allows us to predetermine the entry price. We're not just getting in at the market price, we're entering a limit price, the price that we're happy to enter. And let's say that was 27,500, which is beneath where we are now. We could put 27,500. We're now looking at it in BTC, but under the perpetual futures contracts, you have the option to look at it by Bitcoin, by USDT, or by the nominal value. So we'll just put USDT for simplified terms. And let's say we wanted to put 50%, which is about $50. And the limit order price is 27,500. Again, that's the price we're happy to enter the trade. Unless Bitcoin comes down to 27,500, we don't enter. So we can press open long and confirm it, and it's going to end up in open orders. We will only open up this Bitcoin long position if the price comes down to 27,500. You can see at the moment we're 5x leveraged as well. And whilst we have that limit order open, we can actually add a take profit and a stop loss as well. We can easily add that by selecting take profit, stop loss, and putting in the prices that we want. Equally, we could have done that at the time of setting the order up as well. It's really your preference on what you do. But we don't want to open up this limit order, so I'm going to cancel that for now, so you can easily cancel the orders. Let's say we wanted to get into the market right away, which we can do easily with a market order. We could simply go, again, 50% using a $50 order, 5x leverage. And if I press open long now, which I'm going to, it's going to open up an order straight away. And that is now sitting in positions because it's a market order. This is a live active trade. To close that order, we've got some different options. We can limit close it, which is by, again, selecting a predetermined value. Again, this is what you can do using perpetual futures. So I can set in a close price that I'm happy with, and I can decide to close 100%, 25%, 50%, or any percentage of that position using that limit order price, or I can reverse it, so I can turn this long trade into a short trade. Perhaps I think, actually, I don't believe this is going long anymore. I don't believe it is going up. I believe it's going to go down, and I can reverse that position. But I just simply want to close it in a very small profit, 0.09%, market close, and it will close that trade for me. Done. No problems, no issues. Very, very simple. So that order has been closed. So that is perpetual futures limit and market. Trigger is allowing you to enter different order conditions, basically. So I can set up different trigger prices to go long or to go short. I'm going to make a more detailed video on this feature because it is more advanced, and for beginners I want to keep things simple to limit and market orders, but I will be making up a follow-up video focusing on trigger orders. So again, if you want to learn more in the future, do subscribe and have the bell turned on. So a very important part of the video, and this doesn't just apply to perpetual futures, it also applies to standard futures, but I want to talk about the risk, liquidations, something you need to be fully aware of when you're trading futures. Okay, so let me show you an example. Let's say we're doing a market order. We wanted to go, let's say, for example, maybe 15x leverage on this long here. It could be any leverage. You're going to get a liquidation price. Again, we'll enter with about 50%. And just make sure in the settings you have the setting to have order confirmation on. You want that selected. It's going to give you a confirmation. So we're going to go open long. And it's going to show you here the estimated liquidation price, which in this scenario is $26,088. What that means, when I go long, if the price comes down to $26,088, that is my liquidation price. My trade will be closed at that price. Now, because I'm using isolated margin, only that trade will be affected. You don't want to be liquidated in any case. Always, always, always set a stop loss ahead of that liquidation price. So I'm going to press confirm. You can see here the position value, and you will be able to see a liquidation price as well somewhere. I don't know why that's not displayed here. Maybe I need to expand it. I can move the liquidation price around to somewhere more important. Maybe if I move it here. I'm doing this a bit on the spot, as you can see. But yeah, now I'm displaying my liquidation price, which is $26,000 now and $83.90. I want to set a stop loss above that level because I'm going long. Okay, I've gone up. My liquidation is here. I want a stop loss to be here before that liquidation is here. So it's all down to your technical analysis, but for the sake of this video, I'm going to put my stop loss at $26,085, which is above that level. So I'm going to basically go stop loss. Okay, I'm going to put 20. So it says my liquidation price as well, I believe. Yeah, $26,083. I'm going to put my stop loss as $26,085. And I'm going to press all the Bitcoin of that trade and press confirm. And now I'm being protected. I'm protecting my stop loss with that. I'm protecting my liquidation price with that stop loss. If you had gone short, if you'd bet on the price going down, you're going to want your stop loss to be beneath that stop loss, because the price you're betting on is going down. You want it to be before going to that stop loss too. So let me show you an example here. Let's close this trade, and let's say we went short. So we've got a market order and we want to basically open a short, which we can do in market. Again, we'll use about 50%. I'm going to go open short. It's going to give a liquidation price of $33,301. So what we want to do with this stop loss is have it beneath that liquidation price, because if the price goes up to liquidation, we want it to be stopped out before. So for example, maybe we want it at 33,000. Again, you can simply add a stop loss I'm going to put 33,000. It's going to protect that liquidation price. You put the full amount in of the trade. Let's put it in here. Press confirm, and we can see that that stop loss is in play. If you want to work out in more detail, maybe prior to putting a trade up, when you're setting up a trade, I suggest to use their calculator. There's a liquidation price element to it. You can select the pair that you're trading, whether it's Bitcoin, Ethereum, or any of the other cryptocurrencies, and you can use it to work out your liquidation price ahead of setting up a trade to work out the correct or the best amount of leverage if you are using leverage. And you can easily know where your stop loss needs to be and basically cross-check it against your technical analysis to make sure that the trade makes sense and you're getting a good risk to reward ratio. And if that isn't clear, risk to reward is essentially how much upside there is in terms of profit against potential loss. I always try and aim for at least 3 to 1. If I'm risking 1%, I want to be able to make 3%. And that way, even if you had a 50% win rate, you're overall going to be in profit because your wins are 3 times that of your losses. Hope that makes sense. If it doesn't, and if there's any other questions about anything in this video, again, leave them in the comments below. Let's move on to the next stage of the video. So that brings us to standard futures. Much easier to use, not as many functionality and features, but probably for at least 75% of people, this will be a preferred choice. You simply just have market and trigger orders. And not only can you trade crypto, as I mentioned in the earlier stage of this video, again, chapters are beneath if you do want to rewatch Skip Ahead Navigate. I mentioned you can also trade stocks. They've got the likes of Tesla, Apple, Google, Microsoft, for example. You can also trade Forex, indices, commodities, meme coins. So a lot more options in terms of what you can trade. Again, you can utilize leverage for this as well. But let's simplify things here and talk about Bitcoin for standard futures. Now, at the moment, you can see I have available 0 USDT. So it says the fund account balance is $455. Transfer now. So I can simply select that. I can see where I've got some crypto. I've got some in my fund account. I can put it into my standard futures account, and I can select all or an amount. Let's say I wanted to transfer maybe 100 USDT over. Let's put in 100 for argument's sake. Press transfer, and it's transferred 100 USDT over to the standard futures. It's key to mention there is a difference between perpetual futures account and standard futures account, which you can transfer easily by using that icon, that toggle there. So now I've got $100 in my standard futures account. Very simply, I can select my leverage from 0 to 150x. Again, don't recommend using high leverage, particularly for beginners. Learn to manage risk first. And then you can obviously select the amount that you want to trade. You can go long or you can go short. And it's very, very simple, very easy to use. In terms of using a trigger order, this essentially is using like a limit order price. So you can select the price that you want to enter before, so you don't just enter the market right away. But if you're using standard futures, heavily suggest just to use market. Really easy. You can get in and out of the market easily. You do still have the option of cross and isolated margin. I do suggest to use isolated margin if you're a beginner, which I know 95% of the people watching this video will be. Much easier to manage risk and liquidation. If you didn't watch the previous chapter I made about liquidation, watch it. It's really important and it will apply to this as well. And you can select whether you're using USDT or Bitcoin account. So basically, if you're using standard futures, you do have the option to use coin margin as well. So what that means, again, going back in the chapters where I taught in the markets section, the different markets of BingX, you can watch that chapter and I explain the differences between coin margin and USDT margin on the standard futures. Again, a very important part of this video. So yeah, if you want to go long, simple, select the amount you want to use, select your leverage. You can go long or you can go short. It's as simple as that. Once you've got your trade open, you can close it, you can take profit, you can set a trigger order to close that order. Really easy to use. And I think if you watch the previous chapter, it's all explained there as well. But please, if there's any questions, just leave them in the comment section down below. I'll be more than happy to help out. Once again, if you want to trade on BingX, use the link in the video description because you will get 50% off your trading fees and up to $5,000 bonus using that link in the video description. Even if you have an account already and you didn't sign up with the link down below, sign up with a new account and you can benefit from that exact same offer. That's my little tip. One last thing I will mention, and it's the video sponsor. I thought I'd leave it till last because I wanted it to be more about the value of how to trade, and I wanted this section to only be relevant to those that are interested. Of course, trading, managing risk, not easy to do at the best of times. Of course, I use personally crypto trading bots as well. I actually use a platform called 𝗙𝗏𝗘𝗘, which actually works with BingX. So it's an AI crypto trading algorithm. And what it does for you is it trades for you, like the name suggests, on autopilot. It works through Telegram, so you can monitor the trading bot activity, but you can manage risk as well. But the bot will trade for you. It will open trades. It will close trades. Normally in a profit, it has a 55% ROE monthly. So return on equity, it's making 55% on average monthly returns. It's secure, easily connects to BingX and to your Telegram account. And you can start in minutes. And they also have a 7-day free trial. You don't need to put in any credit card details or anything like that to give it a try. Complete beginner friendly. And there is a link down below in the video description where you can sign up for 𝗙𝗏𝗘𝗘 and use it with BingX if you want to leave the trading or some of the trading to a trading bot. I highly recommend that, whether you're a beginner or someone more experienced. Anyway, guys, I hope you found tons of value in this video. Please leave a comment and let me know if you did or any questions you have. Share it with a friend or with your communities. Please like, please subscribe, hit that bell, and feel free to check out any one of these videos that pop up on screen before you go. And I'll see you again on another educational crypto trading or general crypto video on the channel. Thanks for joining me, guys. And last mention, if you want daily technical analysis, I do have another channel called Marzell Crypto. You can subscribe. There's a link down below for that, where I talk about daily Bitcoin, Ethereum, and altcoin price action and predictions. Thank you, guys. See you soon. Take care. Bye-bye.